Well, Nvidia GTC failing to revive the beaten down tech trade, which is seeing its worst start to the year in the past 2 years. With recession risks growing and the Fed planning for just 2 rate cuts through the rest of the year, how should investors navigate the tech trade? Joining us now with more on this, we've got Sylvia Jablonski, Defiance ETFs CEO and CIO. Great to speak with you here this morning, Sylvia. So just take us into your best assessment of the land right now, because you do have this pullback that we've seen in tech. Some of those names, of course, have been the major outliers in terms of the market leadership for the past 2 years, with the 20% gains in compound that we've seen essentially. And so now that we've seen this pullback, what is the best estimation as to how traders should be reallocating some of their positions?
Good morning. Well, yeah, I mean, we've certainly seen the pullback in the Mag 7, and I just kind of heard the last conversation there about nobody's pounding the table on Nvidia, and I mean, I will pound the table on AI and quantum computing, right? That next generation of technology, and then through that, I have to pound the table on Nvidia. I really think that you're talking about these transformational shifts that are going to change the way we live, work, play, interact with data, benefit health systems and things like this. And these stocks that are beaten down are going to be, the key players in those trends. And so what I would say is, right now, when the market is like this, investors get spooked. And what they do is they allocate to XMAG. They look at, the other 493 stocks. They look at ETFs that, kind of like take out the Mag 7, or they just allocate to the single names that are outside of the Mag 7. Or they go to the sidelines, right? But I think, if you look back at 2022, if you look back at COVID, it's, of course, the generals always fall first, but then, if you buy them on the dip, they're also the ones that tend to recover first and give that performance back pretty quickly. So I think if you're in it for the long term, there's some good dip buying here.
So Sylvia, maybe pulling away from the stock performance for a second, and just some of the details that we heard on the technology front, the product side at GTC. What were your kind of takeaways as you look through, really 3 very busy days for the development of AI, quantum computing, and so many things that are really going to shape tech over the next couple of decades?
Right. So what I took away from it is that there is so much enthusiasm for the continued growth of AI and for the kind of commencement of growth for quantum. You had that ChatGPT moment, which I think propelled AI forward, and you had a lot of, like market spirits just driving a lot of these stocks up before anything really happened. And then, of course, it kind of falls back. A lot of people call it a bubble. I think what has happened since is that there's now this reset, and now there's more information about how these things work, right? Like now we have ChatGPT, we have Grok, we have these different tools, and we're seeing the benefit of them, and corporations are seeing the benefit of them. So I think what was exciting is that you can kind of start to see how AI is going to replace a whole lot of costly types of processes over time and benefit the revenues of, the greatest companies in America and their future earnings potential, and then GDP. And then with quantum computing, there's kind of been this uncertainty around where are we with this? And when you hear from companies like D-Wave who are doing it now, IonQ that has a strong balance sheet and has come up with this, ion trap technology, Rigetti, I think there's a lot of exciting opportunities here, again, for longer term investors that are of the belief that we're at the beginning of this, transcendental type of technological change.
Just to follow on that, like I know what I can do with ChatGPT right now from a consumer perspective, and companies probably know what they can do with generative AI from a data set perspective. I have no idea what I'm going to do with quantum, what use it would have in my daily life, what use it would have for some of these companies. They're probably having a lot of different discussions with their own, KPMGs of the world or Accentures as they're having all these consulting meetings and trying to figure that out. But how fast can this realistically scale?
Well, I mean, if you think about it, the theory is that you have a classic computer and it operates in zeros and ones, and then you have quantum computing, which can, operate in multi-states, in parallel states, and it's thought to do things, 1,000 times quicker than what a classic computer can do. So if you think about like, well, what do you need that for? I mean, driverless cars, right? You would have to process data at these immensely quick speeds in order for that to be effective, and robo-taxis and things like that. Same thing with cryptography and aerospace and defense, even bank risk and things like that, making real-time decisions about who to give a loan to, or kind of like what to invest in and whatnot. And you might think you have that with AI. You have it, but it's still really, really slow. If you talk to any doctor that does research, for example, it takes them hours and hours and hours to parse through data to come up with one potential thesis, and then months and months to sort that out. If quantum computing is accurate and parses that data more quickly for them, does that cut drug discovery, cure discovery, things like that, in half or more? So I think it'll impact the society greatly in the future, but it's in its infancy.
Sylvia, before we let you go, I want to ask a little more broadly about what you're seeing in terms of investor behavior, in terms of flows, what the market feels like to you guys based on, what you're seeing on the ETF side, and where demand is really cropping up. Because, with this kind of market action, it's always been interesting to see how relentless, various ways you cut it up, that sort of retail, that buy the dip mentality has stuck around, even with, some of these majors really coming off in terms of price.
Right. Well, I can tell you just, from our experience as an ETF issuer, we've mostly seen inflows into our funds, right? So the price of the funds is going down because, particularly with like quantum and 6G and things like that, because big tech is going down, and that's impacting anything related to tech, semiconductors, things like that. But actually the flows are coming in, and particularly into quantum and particularly into 6G technologies, right? And I think a lot of that is around this conference and Nvidia's announcement that they're going to be investing in quantum, that they're going to be building out 6G, because you're going to need this lower latency for all of this data to be sort of processed and for AI to come to fruition to its best capacity. And so we actually are seeing a lot of flows into these types of names. That being said, on the other side, we're seeing large institutions that had a heavy overweight to the tech names. We haven't seen them selling, but we've seen them allocating to XMAG. So they're actually taking on more market exposure because there is this dip and opportunity to buy, but they're looking XMAG right now. So we're definitely seeing that on the institutional side.
Sylvia, good to see you. Thanks so much for the conversation here this morning.